Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, investors are still in a risk-off mood, even if the Kiwi dollar is on the rise. Yesterday, equity markets in Asia tumbled to follow Wall Street in Europe at the end of last week. Tokyo was down 3%. Hong Kong and Shanghai were both down 2%. But although these are big daily falls, that still leaves the Shanghai index up 23% so far in 2019. Hong Kong is up 14% year-to-date after yesterday, and Tokyo is still up 7% so far this year. So yes, yesterday's falls were large, but only a short-term correction. And this morning, Wall Street is flatlining just below even, and European markets did the same in the earlier session. But as today's session goes on, the Wall Street decline is inching down, and the S&P 500 is now down another 0.2%. The US National Activity Index, released by the Chicago Fed early today, won't be changing any minds, but it does not support the view that the US economy is expanding. It shows a recent fall away in activity. Things are certainly challenging in the oil patch. A Dallas Fed survey points to growth that is falling away faster than expected. Of particular concern for them is the quick pace and the fall-off of new orders. And there is little data out to give direction to markets in Asia. General fears of trade prospects are driving market investors. But the Chinese ordered 300 airplanes from Airbus overnight, completing a long-awaited and expected order. In India, ahead of their elections, things are not as rosy as you might expect. They're having slowdowns in their exports and their rural economy. In addition, credit availability is under pressure. All this is likely to undermine their high growth expectations. India's economy may not be central to the world trade, but a faltering there will be noticed. And to balance out the gloom, we should note that iron ore prices are remaining high, and benchmark copper prices, often a signal of future economic trends, are also remaining high. Neither of these commodities would remain elevated if Chinese demand wasn't resilient. US Treasury 10-year yield has fallen sharply and is now under 2.4%. Their 210 curve is now at 16 basis points positive, while their negative 1.5 curve has widened to 24 basis points. And gold is rising, up $9 today to $1,322 an ounce. US oil prices a little changed today at just on $59 a barrel, while the Brent benchmark is just on $67 a barrel. And the Kiwi dollar is also rising broadly, and now at 69.1 US cents. On the cross rates, we're firmer again at 97.2 Aussie cents, and against the euro, we're up to 61.1 euro cents. That puts the TWI up to 73.6. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.